every life insurance policy got 3 basic sums of money you're going to deal with. Every life insurance policy got 3 sums of money you're going to deal with. One is the premium, how much you pay the company. One is the death benefit, how much the company pay you. The other one is the savings part. You know, in the insurance world, they call it cash value, but it's just saving money, right? You can save money through an investment program, right? Whatever. You can save money in the bank, but it's a savings element, right? In the life insurance world. But there's only 3 sums of money you got to evaluate. They ain't got 50. I don't care. They can give you a policy got 50 million pages. I'm looking at 3 sums of money. How much I pay you when I die, how much you going to pay my family, and tell me about this little savings thing. So, simple way to deal with whole life on the front end, right? Ask somebody who's trying to sell your whole life. I'm going to deal with premium and death benefit, right? Because I'm jumping where the heart of a whole life thing is, which is also the heart of a universal life, which is also the heart of an index universal life insurance policy, right? Whenever you're dealing with any one of them 3, team, you got to get down to the cash value. That is, team, the heart and soul of a whole life, universal life, index universal life is the cash value. If you master the understanding of how the cash value works, listen, and I'm going to tell you how it works, and watch this. I always say, when I tell you how it works, you can tell me if you think it's good or bad. You can tell me if that shit's strong or weak for you. You can tell me, does it fulfill the purpose of whatever you want. You tell me, right? You can even tell me how many people you think even play that game. So just remember that. Premium, I'm teaching you cash value tonight. There's premium, death benefit, cash value. I'm going to knock out premium and death benefit in a matter of a minute or 2, and then the rest of the time is going to be cash value. So here we go. Let's do a premium death benefit. Here we go. You go ask anybody dealing with whole life, right? And ask them this. You say, the premium that's required for me on a whole life policy, right? The premium I'm going to pay, right? In comparison to the terms premium, we're going apples to apples, premium, right? Is a whole life policy premium more beneficial to me than a term premium? Look at that question. In relation to paying premium, is the amount of money required for me for this particular whole life policy, is it more beneficial to me in amount to pay this premium, right? Versus the amount they charging me on the term policy? Is the premium in my benefit? Does the premium benefit for the coverage that you're presenting to me? And I'm talking to you if you was telling to me. For the coverage that you offering me, right? Is the premium that you charging me for this coverage? Is the premium that you charging me for this coverage, right? Is that better for me to pay that premium based on that coverage? Is that better? Is that better? Is that more beneficial to me? And listen, I ain't talking about trying to go and pay $1 for no life insurance. I ain't talking about that either, because I believe in paying, right? Things that have more value cost more. But what I'm saying, what don't make sense is somebody charging me more money for something that got less value. That don't make sense. Now, if you charging me more money for anything and you giving me more value, then I'll pay more money gladly. It's almost like certain school, right? Well, why is tuition higher over here and this stuff? Well, these certain institutions provide more value for the kids, right? They got better teaching, right? They got better facilities, right? So they got more programs. So it's only right that if you went to this school, you pay more in tuition. Why? Because if I pay more tuition over here, my child is actually getting more value from an educational standpoint. That makes sense. But what don't make sense is for you to spend more money on something that actually gives you a smaller check. But just ask them, listen to the question. Based on the coverage that you're offering me, is the premium that you're charging me in my best interest? That's how you deal with the premium. The premium is out the way. The premium's gone.